get started. Let's go to the platform here. You'll see I have the Euro JPY on Forex. Before I go forward, most of these are best for Forex, what I'm going to go through today. This isn't exactly the best kind of strategies for options. You can use it for options, but you'll see with the kind of stuff I'm doing, especially with exit points, why this would be ideal for Forex, right? Because we want to go in when we want, and we want to get out when we want, right? And that's what's going to make it quite useful for Forex. Now, let's take a look at what we have here. This you probably all recognize. If not, it's the stochastic oscillator. I'll give you a quick explanation of how it works for those who haven't used it before. But this is our new unique indicator here, sorry, the chop zone, right? So let me show you where you can find it. If you go to indicators, left side, you go to trend, and you go up here, chop zone, right? You can open this up. Everything default here as well. I won't need to change anything. It's quite a simple indicator. Let me show you how we're gonna use it. All right, so this is our lagging indicator for this strategy, right? To those of you who are familiar with the stochastic, you might know that it's a leading indicator. Now, I'm gonna briefly explain the difference between the two. A lagging indicator, such as the chop zone here, is giving us information on the current trend, right? So just like the name, lagging indicator, there is a lag to the information we're getting. So the chop zone is not going to tell us what's going to happen next in the market. It's telling us what's happening now, right? The leading indicator here, stochastic. Actually, stochastic can be both leading and lagging. We'll get to that in a bit. But its leading quality is the fact that it gives you a leading indication of where the market is going. So it gives you prediction. What we're going to do today is we're going to take the lagging indication to go in and the leading one to get out. Maybe not most, it's a gross exaggeration. A lot of traders like to make trades on leading indications, right? Whether it's the RSI or the stochastic, they'll see where the market might go and they will take a trade, right? To explain to you the logic of what we're doing now, when you have a leading prediction, such as here, right? So for example, the stochastic, we have this 80 line right here, right? The green line and the 20 line. Now, what does this represent? This green line here is the overbought level. So it's telling us when the two lines here come up here, the price is going too high, right? When the price is too high, we expect it might drop back down. But perfect example, it didn't drop back down much here, did it? So predictions can be wrong, right? So the logic behind what we're doing is the chop zone, the lagging one, when it tells us a trend has started, it's already started. So we're going to try go in as early as we can. And when this one here predicts that the trend might reverse, we will get out. So let's look at the chop zone. You'll notice we have a variety of different colors here, right? We have yellow, light green, green, dark red, orange, light blue. As a general rule, the darker the color gets, the stronger of a downtrend we have. All right. The lighter the color gets, the stronger of an uptrend we have. Now, here's the thing. Anything between light blue and dark red is probably useless to us. I mean, you could take the changing colors to determine that there might be a change in the trend, but remember this is a lagging indicator. So we don't really want to use it for predictions. So I'm going to suggest to you any color other than dark red and light blue. So like the brown you have here, the orange, the green, the yellow, just ignore it. It just means don't trade during that time. For example, if you've ever used the alligator indicator and the lines are tangled up, you don't trade, right? Same thing here. Any other color other than these two, we don't trade. So we do trade when we see light blue or dark red. For example, here, we see light blue, right? As soon as we see light blue, it's indicating that an uptrend has started. So what do? We see this, we make a buy trade, right? And now you'll see why we're doing it on Forex and not options. So we see this right here, we make the buy trade, and then the market is going upwards, right? As it's going upwards, you will 9 times out of 10 see the stochastic here tell you that we are in overbought level, right? That's fine. That's fine. It's fine while this is still happening. What it's telling you though is that the price is going potentially too high. Okay. Now remember, this here is the prediction. So this is our trend, uptrend, and we are buying right here, right? This is telling us price going up, 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 too high, too high, too high, too high, too high. Look at these two lines, red and blue. Remember I said it's both leading and lagging? Well, this one here, when this red line takes over right here, the trend reversal has started, right? So this is where you get out. When it's up here, you keep your eyes on the platform and you're ready. Crossover, you get out, right? Quite simple. Light blue, we buy. We wait for it to go above the overbought. Does a crossover, we get out, right? Let's look at the opposite one. Here, you're going to see an example more of kind of minimizing your losses, because obviously you're still going to get false signals. So let's take a look at what's happened here. We had dark red and we went downwards, right? Oh, by the way, before I continue, guys, I forgot to mention any questions you might have. Please feel free to ask them. I will answer questions after each indicator. All right. So any questions about this setup, I will answer any questions you might have before I go to anything else. All right. So as I was saying, we have the dark red here. And obviously we're going for a sell trade somewhere here, right? This candle right here. As soon as we went first candle in, third candle, it told us the price is coming back up. So you could have still made a little bit of profit here, not much, right? So what we had here was the stochastic told us, get out of the trade. It's not a good trade. So maybe we make a little bit of profit, maybe we make nothing. But at least we know that we should have gotten out of the trade, so we're not really making any great losses, right? So the stochastic can be used to both tell you when to get out of the trade when you had all the profits you're going to get. It can also tell you when to get out when there's nothing really there. So it's a way of kind of keeping the trade safer, right? Let's look at another example here. Light blue again, right? What does that tell us? Uptrend. We go into the trade, goes up here, overbought, crossover. Right? Now, you might say, but Quaker, the price kept going up. Yes, it did. Yes, it did. Trading, I mean, if you leave your trade forever, there's a potential it can make you money forever, isn't it? But we want to be safe. So this is the safer exit. You can keep it going if you want. I'm showing you a less risky way to go in and a less risky way to get out, right? If you were to follow these indications here, you would go in here, get out here. And then your next trade would be somewhere here, right? What do we have again? Dark red, right here, this candlestick, 1, 2, 3. Here it's telling you to get out. You get out, you had 3 candles. Yeah, you had some profit there. It's all right. You don't have to win all of this, right? You don't have to win all of it in one day. We are taking relatively safe trades. Of course, it's still risky. I mean, you could still, lose funds in the process, but we're trying to be as cautious as we can. All right. And I think that's all from my side about how you're going to combine these two. Let me check quickly if we have any questions. No? Okay, I don't see any questions. So I'll assume everyone is okay with what we have so far, right? I'll just add in one more thing from my side, because this is something some of you might be thinking already. You might ask why we didn't use an RSI here instead of a stochastic. Well, because RSI doesn't have these two here, right? RSI would tell you, actually, let me show you. Right here. Momentum, relative strength index right here. By the way, stochastic was also everything default. I didn't change anything on it, just to point that out. Now, RSI, overbought here, right? Same as stochastic. You'll find 9 times out of 10 that they give you the same overbought and oversold levels, right? They're very similar. It's just that stochastic has the added benefit of this crossover here. So you know exactly when to get out, All right, RSI doesn't have that, and with the RSI, by the time it comes back down, it might be a little bit too late. So that's why we're doing the stochastic. That's just that extra function, which makes it one of the most popular oscillators out there. Right? Check again if you have any questions. 5-minute trades. That is a good question, Sim. Okay, this is a whole topic of its own. It's a whole webinar of its own. Maybe we'll save this for bigger discussion in the future, but let me give you a brief explanation. When it comes to timeframes, it doesn't matter. You can use it for whatever time frame you want. You just have to adjust the candles. Here, I'm using 30-minute candles, right? So your trade, depending on how many candles you're trading for, again, with the indications, you might go for an hour trade, 2 hours trade, somewhere there. You can do, if you're going to do 5-minute trades, you're going to obviously use a higher leverage. Multiplier is probably going to be 500 to 1,000, which I wouldn't recommend if you're not extremely talented and skilled in Forex. But yeah, if it's something you're comfortable with, you can do that. 1-minute candles probably would switch over to 30 seconds if we're going to trade on 5-minute trades. If the question is whether you can use this for options, you can, but it defeats the purpose of using the stochastic to know when to get out. Right? You can use just a chop zone, and you can use a bit like some general rule of trade 2 candles, for example, something like that. You can make an options trade. So if you're in a 1-minute time frame, you can do 2 to 5-minute trades somewhere there. You can do that. It's just it takes away the benefit of using this right here to know exactly when to get out. All right. And yeah, when it comes to time frames, just keep in mind the faster you're gonna make it, the riskier it will get. The thing is, these movements here, right? This movement here, if you ask me why this happens, I can't tell you. Is noise. But if we zoom out, right, and we look at the larger movement, something caused this. There was some economic event. Now, when you're trading with a technical analysis, maybe you're ignoring the economics, but the problem becomes if you're trading on 1 to 5-minute time frames, right? You're trading on noise within the actual movement. Now, we might use a technical analysis today to trade on these movements, but these movements were caused by something, right? It's not noise. There's a reason behind it. So at least we're trading on an actual economic movement here, rather than just a 1-minute quick trade on the noise, right? And you have to keep in mind, you can do quick trades. There is a time and place for it, but you probably want to focus on actual market movements. All right. One more question, a couple more questions here. Some options trades with those. Okay, I think I just went through this. So basically, to recap on the options version, you could do it where it's the you're just using the chop zone, right? You're using the chop zone to go in and just do 2 or 3 candles, and that's it. Because you obviously don't control the exit points. So with this setup, the best you could do is use the chop zone. If you see dark red, make a quick trade. A few minutes right here. Same here. Right? And that's how you could apply it to options. 1-minute trade. Again, the same thing. If you're going to do 1-minute trade, you could do your candles to be 15, 30 seconds. And again, go for 1 or 2 candles, 3 candles. You can adjust anything. The time frames are not so important as long as you realize that you're taking the risk of trading on things that are less significant to the real world. But if that is something you want to do, that's fine. Just make sure you adjust everything. You're going to make 1-minute trades. You're going to use 15-second candle or 30-second candle. You're going to use 2-hour candles like I have here. All right. General settings in chop zone. Well, look, with regards to general settings, don't bother too much with it. Just keep an eye on the colors. Keep in mind, actually, let me tell you one way we could make it less messy. Okay, so what we can do here is, remember, we're using the light blue and the red, right? So everything else is unnecessary. So if you want, you could do this. And when it comes to the settings, you don't need to change anything. It has its own algorithms of different moving averages, right? Because moving averages show you current trends, and that's what it's doing. It's just showing you uptrends and downtrends the same way that a moving average would. It's just that it has its own algorithm. So if you take a look now, we have only the ones we care about. Dark red, light blue. You don't have to do this if you don't want to, but it's one way you could approach it so that the rest of it doesn't get in the way. The screen didn't show, just showing chat option. When did the screen not show? Is everything okay? Rizwan saying the screen didn't show. Is everything okay now? Problem with my link. Rizwan, you could try, what browser are you using? Yeah, possibly. What browser are you using, Rizwan? How's your internet? You could try like an Ethernet cable if you have. You could try clear caching cookies. I'm not sure. Try reboot your internet, your Wi-Fi, or something to get back in here because it seems like everything is fine from our side. So it must be something external. Right? Your side also. Okay. Guys, for any issues with the screen, it has to be something external. So try reboot the internet, try use Chrome if you're not already, try clear caching cookies. And that's the best I can say from my side because it looks like everything is running clearly from my side. I can't do anything more than that. I'm really sorry that's happening. If you can find a way to fix it, I hope so that you can, so that you continue with us. For now, I think yes, webinar is recorded. Good question, Kostas. Webinar is recorded, so we will send out replay links for whoever wants to watch it again. I'll take further notes, anything like that. Everything is recorded, so don't worry about it. So I'm going to go forward now with the second unique indicator for today. I have the GBP USD here. This is the Woodies CCI. Okay, now it's here. It looks messy. I'm not going to lie, but I'm going to walk you through it so that we understand it together. So here's what we're doing. You can find Woodies CCI here, indicators, momentum, all the way down, last one, right? So leave all of this default, come to colors and display. Do you see the turbo histogram? Make this the same color. So this is what I do, right? It makes no difference to us if it's green or red, the histogram. We wanted a neutral color because the strategies we're going to use are going to depend on the size of the histogram and the direction, not necessarily the color. And I'll show you what that means now. Right? So I'm going to show you two different strategies with this indicator. The indicator by itself, and as you can see, I have some lines, some trend lines here, graphical tools, right? I'll show you how to add those in a bit. I'm going to show you two different strategies with this indicator. The first one is called the zero line reject. Okay, so if we zoom in here, we have a baseline between 100 and minus 100. So there's a baseline there, right? Some people call it baseline, some zero line. I'm just going to call it zero line for today. So here's how it works. If we look at our histogram, take a look what happens here. Do you see this shape where the histogram is kind of from the zero line towards the 100 line? It comes back down to the zero line and then it jumps back. So this is being rejected by the zero line. The zero line is not letting it go above, all right? So this area here, let's zoom in more. This area here, you see, is below the baseline. So when we're below the baseline, we have a downtrend. This is nearing the zero line. The zero line didn't let it go lower, and it jumped back. This is where you sell. Right? If it's below the baseline, we sell. If it's above the baseline, we buy. Okay, so I'm going to show you a buy situation in a bit. For now, we're looking at the sell situation. So again, we want this shape, right? Imagine like two hills like this. Two hills comes all the way down, doesn't go above, jumps back. When it jumps back after the first candle, you sell, and you make a sell option, basically a sell trade, right? And here's how you get out. Do you see after your trade, you get a hook here? This hook is your exit point, right? So when it bounces back here, you have these two histograms or these two candles for a trade. So it bounced back here. So this right here would have been your trade, right? After these two, we get a hook create. That's where you get out. So below the zero line, reaches zero line, bounces back, first candle, we sell. On the third one where we get a hook, we get out, right? Let's look at a buy option. There we go. I think this one looks even better from a visual standpoint. So you'll see the same thing happen here, right? We have a little hill here, like a little mountain. Drops to the zero line, doesn't go below it, bounces back up. Again, a zero line rejection. So here, drops down. As soon as it dropped down, but it doesn't go below, and we see it come back, this, because it ends higher, is our trade. So we go in here at this candle, keep it going until here, here. So essentially this is our trade right here. Hook right here. This hook, we get out. All right. So again, big histogram, drops to zero line, comes back up, we go in, hook, we get out, right? This is the zero line reject. You'll notice that it doesn't happen too often, but then again, these are 1 hour candles, right? And as a preemptive answer to the question of can you use this for options and faster timeframes? Yes, you can. You just can't make use of the hook here. So you can do the same rule as we said before. If you're gonna do 10, 15, 30-second candles, you can go for a minute or two expiration, and you're gonna finish the trade somewhere here, right? Just be careful, don't overestimate or underestimate, right? If you're using 30-second candles, just go for a minute or two expiration. If you're using minute candles, go 2 to 4, somewhere there, right? So you can always adjust. Candle timeframes and expirations, you can always adjust. If you're doing it on Forex, you close the trade at the hook, right? So always remember this shape here. Whenever you see the histogram go up and it drops back down, you're just waiting to see if the next one will be higher. If it is, you go in, right? So for example, here, right, the histogram drops down and then it goes below the zero line. So it doesn't agree with our strategy, because if it had jumped back up, we would have traded, but it reversed into a different trend. So we don't take any trade here, right? Based on this strategy, at least, right? Now, let me show you the other one. This one is called a trend line breakout. Just to confirm though, these aren't trend lines, they're just basic lines, which you can find here on graphical tools, these ones. We don't need trend lines because it's really, really small here. So you just, you click on, let me show you how to do it. So you do line, you do this, drag it, draw it, and that's it, right? So let's remove that one. And you'll see I've drawn a few here, and I'll explain what they are. Let's zoom in a bit. You'll notice that this line here was on this green line, right? This green line is an upwards trend. So I draw the line here on this green line, right? We have an upwards trend on the green line. Once the green line breaks out of this diagonal line, so you see here it breaks out of it. So we had a trend line here, and it breaks through because it was a green line going upwards, and it broke through. Now we're trading on the reversal, right? Before, in the zero line reject, we were trading in the same direction. So it was lower, come back, goes back down. Now we're trading on reversals, right? So if you look here, price going upwards, 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 the line breaks, and we trade downwards as a reversal. Zero line stronger, please. Cannot see very well. Guys, are you having trouble seeing the zero line? 1 second. Baseline. Let's try this. So I went to the baseline, guys, and I made it darker black because it was quite. I think it's better now. Can you see it? You can also make it thicker, I guess. Let's try that. So, okay, when you're looking at your screen, you're probably going to notice it, but just for the purpose of this presentation, I went to baseline. I made it darker, thicker line. I think you guys should see the zero line better now, right? Fantastic. You're welcome, Costas. So, where were we? Now, so as I was saying, we had the green line as a trend line. It broke through. We went for a sell trade, right? We go for the next one. Let's zoom in a bit more. Same thing. I drew a line on this green line here. As soon as it cut through, it broke that trend. I went for a sell. And as you can see, here I could have had a good trade. Right? These are 1 hour candles, by the way. So it's not as small as you might think at first. Let's look at the opposite scenario. You'll see here, I have a one on the red line, right? So a trend line on the red line, right? This is why we kept the lines green and red, but the histogram we made it a neutral color because it matters. If it's a green one, we're going for a reversal into a sell. If it's a red one, we're going to reversal into a buy, right? So same thing here. Breaks out of the trend line, buy the trade here. Right? One more example. Again, this one is with an uptrend. As you can see here, breaks through the trend. We take a trade, right? And about the question of exit points, we'll use the same thing. We'll use the hook. So for example, here, your trade was here. It does this hook just as before. You can get out. Right? You can use the hook in the Woodies CCI to exit trades with either strategy. And we have one more here. You can see again the same situation. This one's not as good of a trade as you can see. This will happen. I mean, out of how many? 4 or 5 or 6. This is the only one that's not as nice. Still something. There's no loss, but you had a small trade here, right? You know, not every trade is going to be perfect, and you need to be prepared to have some of them yield less results than others, and that's why money management comes in key, which will be our third indicator. It'll be all about money management. We'll get to that in a bit. For now, I want to check if you guys have any questions about this setup, because I think that's everything from my side. Let's see if we have. Daniel, you asked why. Can this indicator be used for 1 minute binary or digital assets also? Yes, it can. Again, please, if you're going to do that, keep in mind that you cannot control the exit points, especially if you're in the binary. What you can do though is you can adjust the time frames. So 15-second candles, 30-second candles, and you can use it for 1 minute options also. All right. Any other questions for this setup before we go forward? Fantastic. You're welcome, Daniel. Anyone else? Any questions? No. Okay. If you have any questions, how to I adjust the 1 minute setup. You just change the candles. Take a look. Okay, it depends if 1 minute is 1 minute time, 1 minute candles, or 1 minute expiration. I'm going to assume expiration. So 15 seconds, everything will adjust by itself because indicators, what are they? They're just algorithms, right? They are going to take into factor the new time frame. It's going to change. So it's going to be the same thing, just obviously riskier because now you're again trading on potential noise that might be insignificant to the real world. All right, there, Mos. Yeah. If you have any more questions for this setup, keep asking and I'll answer them at the end. So let's go to the third indicator now. This is the average true range. Now, this is probably the most unique technical indicator I've personally seen. It's quite special, and the reason for it is because it doesn't show you entry points, it doesn't show you exit points, it doesn't tell you the direction of the trend, it doesn't tell you reversals, it tells you how volatile the market is, right? So at first glance, we see GBP CAD over here is 0.0015 something, right? Or is it telling us? Right now, I can't do anything with that. I don't know. And we're going to compare it with your GBP to find out what we can do with it, right? Here you can see 0.0008. So what's it telling us? It's telling us the level of volatility in this asset. So clearly here, GBP CAD is going downwards, right? You can see from the candle. The ATR, the average true range, which, by the way, before I go forward, you can find it under popular, average true range right here. Everything default. I just changed the color just for my personal preference. Other than that, you don't need to change anything. So it's telling us volatility of 0.0016, right? That is how fast this asset is moving. So we know it's moving downwards, right? And we can use other indicators such as, you know, the Woodies or chop zone, anything we're going to do to know the direction of the trend. That's not the business of ATR. The business of ATR is to tell you how volatile it is in whatever direction it's going. So it's going downwards. It's telling you how fast it's doing that, right? So again, 0.0016 compared to 0.0008, right? This is double the volatility than Euro GBP, right? So right now, in current events, GBP CAD has twice the volatility over Euro GBP. Also, make sure you use the same candle time frame on both. Otherwise, it's going to give you separate readings. So it can be, again, if you want to use 1 minute candles, fine, but make sure it's both. It's the same on both assets or all 3 or 4 assets you're comparing, right? So what does this tell me? Double the volatility. It tells me that it's doing twice the distance because it's going twice the speed. So let's say that we put $100 in GBP CAD, $100 trade, and $100 trade in Euro GBP, right? And let's assume that we guess both trades correctly. They're both in the profit. This one will make me a lot more profit because it's twice as volatile, right? As long as we guess the direction correctly, which again can be done with the other 2 setups here, this one will make me double the profit. If this one can make me 25% profit, this one maybe will make me 50% profit, as long as I guess both correctly, because it's going with twice the speed, it's going to cover twice the ground, isn't it? So in order for you to manage your money and your risk appropriately between assets, you need to invest according to what this is telling you. So double the volatility, half the investment. So if, for example, if I'm trading with, I don't know, with $100 on GBP CAD, I need to trade with 200 here in order to keep the same risk, right? I'm trading with $10 here, 20 here, 50 here, 25 here, right? Now it's always going to be it's always going to be double, but it is going to give you a good idea of how much more risky the trade is. And I'll be honest, I hear most traders use the basic concept of use the same investment for all trades so that if you win more than you lose, you'll be in the profit zone, right? Sure, but not all trades are at the same risk, right? So the ones that are more volatile carry more risk and they can make you more profit. So in order for you to kind of assess your risk per pip value or per percentage value, this is a very calculated way that you could approach money management. And the thing is that this here is never going to get in the way of your strategy, right? You could use this here with your Woodies, or you could use it here with all of this added on top. You can use the ATR, and you probably should, again, for educational purposes, no financial advice, but you could use this any strategy, as long as it's a CFD, right? As long as it's not an options trade, which you can still use it for options. I'll get to that in a bit. But in any kind of Forex trade, you can use this to know how much money to invest. Let's say you have $1,000 and you want to invest it across 5 different currencies. Let's say you have $500, $200, $10,000, whatever you want to do with your own money. This way, instead of putting like an equal amount across all assets, you could just do a weighted system and figure out which asset needs more than others. And it doesn't have to be an exact science, because you are expected to lose some of these trades as well, right? You're not going to win all of them. But the higher volatility ones, you are going to probably use less money. And this will kind of like, keep a more equal status in risk, right? Risk is very important. If your money management is not in check, you can't expect to do very well, right? Strategy into entry and exits is one thing. Money management is another. They're two different beasts, and as long as you can master both, there's no reason why you shouldn't succeed. All right. So yeah, that's the average true range. Let me go back to the questions to see if there are any. Is the webinar over? No, it's still going. Can you not see it? Couldn't see anything. When did it stop? Can anyone else see anything? Okay, look, again, it looks like it's just give another example of an entry on WCCI using the trend lines. Of course, I'll show. Okay, before I go to the WCCI, those of you who can't see, it's probably external. So what we're going to do is there will be a replay link. So I am going to send the replay link once it's available, so that anything you missed out on was probably due to connection. So you will be able to see, we'll have a special link on YouTube. So you'll be able to see the replay link, and everything should be 100% fine. I do apologize to whoever couldn't see so far. Yes, it has to be connection problem, because from our side, everything does seem perfect. Again, don't worry. If you got to hear it live, that's cool. You'll see the replay version afterwards as well. And any questions you might have, you can ask your account manager, your key account executive, or you can ask support. And all of us here will be more than happy to help you out. So don't worry about it. You'll be able to see all of it, and you can contact us at any time to answer any of your questions. And again, the thing about the questions, if you think of more questions later on, you can just ask your account manager, anyone. We are more than happy to help out. Please, to summarize, all right, there was quite a bit of material. I'll do a very brief summary, but again, I think the best will be if you can watch the whole thing in the replay link, because it's quite a lot of information, and this was already sort of a summarized version of all the information you can get from these indicators. So I'll do that quick summary, and I'll show the trend line breakout as well in the process, and then we will, I'll send out the replay link, and again, you can watch it at your leisure. Now, so again, from the start, we started with we don't need the RSI, we started with the stochastic and the chop zone, right? Chop zone, light blue, we buy a trade. Overbought on the stochastic, we get out, right? As simple as that. Light blue, we buy, stochastic goes overbought, you get a little crossover here above the green area, you get out, right? Opposite situation here, dark red, we sell, down, 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 comes here, below the oversold, crossover, we get out, right? So light blue, we buy, overbought, we exit. Dark red, we sell, oversold, we exit, right? And that's the first setup. Second setup, the Woodies CCI. So I'll show you again an example on the trend line breakouts in the zero line reject. So I believe I was on hour candles before, right? Yes, the lines have saved correctly. So again, trend line breakouts. Let's take a look here. We have a good example. This is the trend line breakout. If you have the green line here going upwards, we have an uptrend, right? You put a line here, a line from your graphical tools. As soon as the green line moves off from the direction, as soon as it moves off, you sell, because that means that your green uptrend has dropped. So the reversal, you sell on it, right? You make a sell trade. The opposite is here. You have the red line going down here, right? We have a trend down here. You put a line. You don't actually have to put the line, by the way, if you don't want. I mean, you can clearly see when it comes off the visual line itself, but just you can do it just for sake of seeing. Now you'll see that as soon as the red line breaks off from the trend, that's when you buy, right? Remember, red line, price is going downwards. It breaks off from the trend, you buy. So here, you buy, right? And the zero line reject, let's find that again, here. Histogram is below this zero line, right? Comes to the zero line, gets rejected, jumps back, you trade, and you get out from the hook. Now, if you look on the platform, on the chart, most situations where it's below the baseline, the zero line, you'll see when it comes lower, it goes to the other side. When this happens, it's not that often. So when it happens, you take a trade. So this jump off, this rejection here, right? This rejection here, where it doesn't go above it, you make a trade, right? And we had the same example earlier on in GBP USD. Here. So again, goes above, jumps back, rejection, jumps back up, make a trade, get out at the hook, right? Now, and the average true range, to summarize this one as well, like we said, we check the number here. This is 0.0016. This is 0.0008. So about half the volatility, double the investment, right? I need 20 bucks here to make the same kind of profit that I would make here with 10 bucks. That's it. Just check which one is higher, which one is lower. And when it's double the other one, it's an easy example. When it's not, just kind of adjust things as best as you can, right? And yeah, I think that's all for today. I see we don't have any more questions for the time being. So I'm going to thank you all for joining. I hope you enjoyed this as much as I enjoyed making it. Again, if you have any questions, feel free to contact your account manager, support, anyone you want to talk to, and we will answer any questions you might have. So yeah, I wish you all a fantastic day. You're welcome for the webinar, and yeah, I'll see you guys next time. All right, take care.